We begin in China, where retail sales started positive this year, jumping 4% in January and February, up from the same time last year. It comes despite new US tariffs and domestic real estate challenges. The news is welcome, given domestic spending was a priority discussed at China's latest legislative session. On Monday, the central government introduced new consumption measures. For more on Chinese consumption, let's go to John Gong. He's a professor at the University of International Business and Economics, as well as a China Forum expert. Always good to have you on the program. Now, firstly, give us your reaction to the better-than-expected retail sales.
Well, I think it's actually very good news. It's a pleasant surprise, especially with respect to the consumption you have just reported. 4% growth. It's a very impressive number in my view. I mean, look at the consumption figure in the last quarters. It's always been hovering, barely any growth at all. But now we're seeing a 4% growth. It's a very good number. But other than consumption, you look at the industrial growth, look at the service sector. They're actually all growing pretty impressively. I mean, especially the industrial growth is 5.9%, almost close to 6%. I think we had a very good beginning. So I would expect the first quarter GDP will be way above 5%. If everything goes fine, if the momentum keeps, we should be well on target for the 5% growth rate for the entire year.
So what would you say are some of the key factors behind China's decision to prioritize domestic consumption?
Yeah, well, I think these good numbers are mostly because of the economy is recovering in the first place. I mean, the economy has been sort of not growing quite well, for the bulk of last year, other than starting from the third quarter, the government starts to take actions, and then we're starting to see a fairly good recovery. So the momentum is there. You look at the stock market, and I'll also argue that the international narrative about China has entirely changed. The capital is coming back to China. China all of a sudden has been viewed as a powerhouse of innovation, and investor confidence comes back. Start to see fixed asset growth, fixed asset investment growth starting to grow at 4.1%. So all these numbers are, showing that consumer and investor confidence are solidly coming back. So I would argue that the government's actions are starting to take effect. We're starting to see results. There are still some uncertainties, especially with respect to the trade policy on the Washington side, and we have to see what's going to happen.
Can you talk a little bit about how the new action plan helps to address deflationary trends?
Yeah, well, I think I have a fairly different view about this. I think that the deflationary trend is mostly because of the efficiency gains in the value chain, in the production chain, as well as the intense competition in the market. Here in China, things are very competitive. Many companies are competing against each other, and as long as the international prices of key commodities are not rising, dramatically, I don't think we're going to see, very large-scale inflation in China. As a matter of fact, this time, we're still seeing a bit of a deflation. But from the government side, usually the government policymakers view any inflation below 2% is fairly reasonable. And since we're not getting to 2%, it seems to be there's some room that we could have taken advantage of, I guess. I mean, that's the mindset at the policymakers. They're probably going to introduce policies to increase monetary supply a little bit, to increase credit lending a little bit. But overall, I don't see a inflationary picture at all.
Right. The slowdown of wages is something that is suggested that needs to be addressed. What are some of the specific measures China is considering to support wage growth?
Yeah, well, early in the year, the government announced that it is trying to increase the income level of the every citizen, starting with, I would say, the people under the government's control. These are civil employees, employees working for state-owned enterprises. Probably they're going to start to see a round of a wage increase first, which will be felt in the labor market, and in other companies, private companies, foreign companies will probably follow. So this is actually a fairly valid point, though. I mean, look at the consumption percentage of GDP in China; it's very low compared to advanced industrialized countries. And one of the reasons people have been talking about the lower consumption percentage of GDP is the relatively lower share of national income attributed to the citizens, the people, as percentage of the national income. So, this is one way of addressing elevating the consumption level. And I have a little bit of a different view on this. I think the wage level should be decided by the labor market. The market should be able to determine what the wage level should be going. But nevertheless, I think I'm not totally opposed to the government policy to give their employees a break. I guess a wage increase is always welcome by employees.
All right, John Gong, we'll leave it there. Really appreciate your time this evening.
Thank you.